Welcome everyone to Vested Interest. This is Shane, and in this video we are going to cover the 4 stocks I am looking to buy in April. That's right, we are exiting March, on to April we go. Pretty crazy. It feels like just yesterday was the new year, but that's how time goes. So we will cover Alphabet, known as Google, Union Pacific, Owens Corning, and HP, Hewlett Packard will be the 4 that I'm looking to focus on. Now, these won't be the only 4 that I'm looking to buy, but they will be the ones I primarily focus on every week, probably buying 1 or 2 shares. Owens Corning probably will get the most focus, maybe followed by Alphabet. Or I'm sorry, Hewlett Packard will get the most focus, followed by Alphabet, Owens Corning, and then probably Union Pacific in that order. Before we get too far in the video, if you would like to help support the channel, you can do that by clicking that thumbs up button down below. If you find any value in the content, make sure you're subscribed. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever I put out any new content. Watch the videos to the end. Watch time is one of the metrics that the YouTube algorithm looks at. And if you'd like to help out financially, you can buy me a cup of coffee. There is the thanks button down below, or a cup of tea, really. I don't drink a whole lot of coffee, but I do drink tea, so that's one way you could help support the channel as well. Special thank you to everyone who's taking the time to do that. It only takes a couple seconds. It doesn't cost you anything, and it really does help out the channel. Now on to the first of the 4. Again, Hewlett Packard. This is one of the smaller position in the portfolio here. It's back near where I started buying it a couple years ago, 2-3 years ago now. Hewlett Packard, ticker HPQ. This is out of the information technology sector. Like the rest of the information technology sector, it has been hit hard. So I'm looking to build this one out a little bit. As you can see here, 52-week range as low as $27.43, as high as $39.80. So it is right up against their 52-week low again. A beta of 1.11, a little more volatile than the overall market. Now, analysts do call this a hold. They have a price target of $36.23, which would represent a potential 27.73% upside. So I'm surprised they call it a hold, but that's where they're seeing it. Earnings date February 27th. It does have a PE ratio of 10.19, currently $10.19 per share, but a forward projected PE of $7.69. That seems very, very low to me. Dividend is $1.16. They are quarterly payers, divide by 4, and a very nice starting dividend yield currently at 4.08%. Ex-dividend date was March 12th. They have already paid out their dividend, if I remember correctly. I do believe I remember seeing my dividends here a week or so ago. Jumping over to dividend yield theory, and as you can see right here, I am recording this on Friday morning, well, about almost noon now. And as you can see, big drop, looks like a big shoot up in the morning, but then a big drop throughout the day like the rest of the market. Huge sell-off, it looks like, here on Friday when I am recording this. I'll push this video out on Saturday morning. So the rest of the day, we'll see how it shakes out. But so far on Friday, we've seen a big market sell-off, or we are seeing a big market sell-off. So that's why I'm recording right now here as we exit March for the stocks I'm going to buy in April. All right, jumping over to the right, dividend yield theory is one I'd like to look at initially as part of my screener. A lot of this is just initial screener information, so you do want to do more of a deep dive into the financials of these companies if you are interested in them. Don't blindly copy me or anyone else you see on YouTube. Make sure you're doing your own due diligence on these. But dividend yield theory, to look at that, we look at their 5-year dividend yield average of 3.21%. We compare it to their current 4.04%, and since it is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. This one also has a relatively low payout ratio at 40.15%. Looks like the dividend is well covered. They are not in danger of a dividend cut. This company has been raising their dividends pretty aggressively as well. We mentioned the ex-dividend data already, so we'll drop down. Return on equity and return on invested capital are also 2 metrics I like to look at. Now, return on equity was not listed, and I like 10% or better for both of these, so I was a little disappointed with that, but the return on invested capital is very nice at 26.88%, well above the 10% I'm looking for there. EPS growth was listed at 9.35%. I like 5% or better forecasted over the next 5 years. Revenue growth was 1.39% projected over the next 5 years. This is a bit of a cyclical company, right? They focus on computers and printers and some other electronics that they provide. And that's typically a cyclical purchase for companies. Every company that I think I've worked for, I've gotten a HP computer But they don't, buy a new computer every year for us. I've been with Blue Cross Blue Shield now for almost 4 years, and I'm still using the initial computer that I was given whenever I hired on. So that tells you about how long you're going to hold a computer. Typically, 3-4 years, maybe 5 years, and then you're shifting to a new one. Dropping down to free cash flow, I want growing free cash flow over time, because typically if a company has growing free cash flow, they can do some things with that cash flow. They can pay down debt, make acquisitions, reinvest back into the company, buy back shares, which this company is doing, pay a dividend, which this company does, and raise that dividend over time. And we want the company to be doing all of those things, specifically paying down debt and making sure they're financially sound. So here, December 2021, you can see $5.8 billion in free cash flow. Now it looks like a big drop in 2022 to $3.6 billion, further drop in 2023. So that's a decrease over 3 years. We don't like that. $2.9 billion. But then you can see here, 2024 was a banner year. Free cash flow went back up from 2023, but also look at this repurchase of shares. They went back on a buying spree here. Repurchase of shares back in 2021, $6.4 billion, $4.2 billion in 2022. Down quite a bit, only $100 million in 2023, but back up in 2024 to $2.1 billion. So I like that they're aggressively buying back shares. That is one way a company can help out the shareholder and return some capital to shareholders. So I do like that they are aggressively buying back and removing shares from the market. Now, I do hold HPQ. As I mentioned, I am long all of the four that we're going to look at today. I'm long. I do have a position in all four, so I will be adding to existing positions. That's really my focus right now. 244.09013 shares currently. When I pulled this information, down slightly, 0.45%. So again, right around where I was buying this a few years ago. So it is one that I would like it to pull back even more. Maybe I can get it down here in the $27 range and decrease my cost basis a little bit and build this out. Wouldn't mind running this to 8,000 invested, close to 10,000 invested into HPQ. So we'll see how we do while it's pulled back and the overall tech sector is pulled back. Down slightly, 0.45% or $61.02. Overall. Next up on the list, Owens Corning. This is another one in my portfolio, so we will be adding again to all existing positions. Ticker OC, out of the industrial sector here. Right now, again, I'm not really focused on the price currently, because this is it during the middle of the day, right around 11 o'clock, 12 o'clock, whenever I pulled this information. So it may drop further than the 143.36 listed, but that's where it was at whenever I pulled the information. 52-week range as low as $137.50, as high as $214.53. Beta of 1.52, so another one that's more volatile than the overall market. I'm trying to use that volatility to my advantage. Analysts do call this one a consensus buy. They have a price target of $204.18, which would represent a potential 42.44% upside. Really like that. And if that comes to fruition, it would be very nice. Earnings date April 23rd, so next month if you're interested in that. Now, PE ratio on this one, $19.97 currently. EPS at $7.37 with a forward PE of $9.88. Again, very low projected forward PE on this one, in my opinion. Dividend is $2.76, would represent a 1.88% current dividend yield. Ex-dividend date was March 10th. Another one I know that they have paid out already. So you would be in line for the next dividend, but you're going to have to wait a couple months to get it. Jumping over here to the right, again, looking at dividend yield theory, we look at their 5-year dividend yield average of 1.41%. We compare it to their current 1.88%. Since it is higher, same here, 1.88%. Since it is higher than their current dividend, that again speaks to undervaluation, at least according to dividend yield theory. Another one, low payout ratio, 33.79%. I like under 75%, so it looks like the dividend is well covered, not in danger of a dividend cut here either. Another one that is aggressively raising their dividend, double-digit dividend raises, at least recently. Hopefully they continue that trend. Dropping down, return on equity and return on invested capital. Again, I like 10% or better for both of these metrics. Return on equity, ROE, sitting at 12.53%, above the 10% I'm looking for there. Same thing with return on invested capital. Very similar numbers here. Return on invested capital at 12.34% is above the 10% I'm looking for there. Now, this one did not have EPS forecasted or revenue growth forecasted, so I'll be looking for another source to see if I can figure out that information, but was a little disappointed I couldn't see that. Again, dropping down to free cash flow, I want growing free cash flow. So typically a company, if they have growing free cash flow, they're safe. The dividend is safe. Plus they're making acquisitions, paying down debt, reinvesting back into the company, buying back shares, which this company is doing as well. But going back to December 2021 again, 1 billion, a little over 1 billion in free cash flow. 2022 slightly up to 1.3 billion. 2023 looks like that was a little down to 1.1 billion. 2024 back up to 1.2 billion. Repurchase of capital shares on this one again, pulling shares out of the market. 2021 570 million, 2022 795 million. That was a pretty good year right there. 2023 657 million, and 2024 491 million. Again, I am long Owens Corning, 64.476299 shares. Actually, this still says D, so maybe it is paying out in April. March 10th was the ex-dividend date, so it looks like it is paid. Still, that D stands for dividend whenever you look at Ally Bank. So it looks like this one actually is going to pay out in April. That D is still there, so it looks like it has not paid out yet. Dividend payout 410. Yep, April 10th there. Now, I am up on this one, 25.39%. So this is a position that if I was to be adding to, and I am adding to, it'll bring up my cost basis a little bit. So I want this one even to drop back further. Love it back here in the 130 range. So as I add to it, I'm not adding to it significantly. But right now, I am up, like I said, $1,890.77. Union Pacific, ticker UMP, another one out of the industrial sector here, much like Owens Corning. Again, not really focused on the price, but whenever we pulled this information, it was at $234.12. 52-week range as low as $218.55, as high as $258.07. So still another one that's pulling back close to its 52-week low. Not quite there yet. Would love it to get back there. Hopefully it does before I start buying again, but another one that I'm up also. So I don't mind the pullback if it continues. A beta of 1.05, so again, slightly more volatile than the overall market. They do call this one a potential buy. Price target of $260.11, which would represent 11.17% upside. Earnings date April 24th. EPS $11.09. PE ratio current at 21.11, which seems a little elevated for a company like this. So another one, again, I hope continues to pull back so I can add here. Forward PE or add as low as possible. Forward PE is projected to be lower at 19.56. Dividend is $5.36. Quarterly payers to divide by 4, with a starting dividend yield currently at 2.29%. Ex-dividend date February 28th. They did or are going to pay out on March 21st, which is next Monday. Jumping over to dividend yield again, dividend yield theory again, 2.15% is their current. We compare it to 2.29% or over here. This information, why it's a little off, is I'm pulling this when the market's active, so the numbers are going to be a little bit off, but also I'm pulling from two different sources here. On the left here, this is stockanalysis.com. On the right here is Yahoo Finance. Stockanalysis.com here, stockanalysis.com here, Yahoo Finance here. So I'm pulling information from two different sources. So the numbers are a little bit off, like I said, plus it's the middle of the day. So these numbers here, as the market changes, they are going to change. Forward annual dividend yield 2.27%, above their 5-year average. So another one potentially undervalued according to dividend yield theory. Another one, again, payout ratio much lower than I'm looking for. I like 75% or lower. This one's at 47.61%. Again, I like to look at return on equity and return on invested capital as initial screener here. Return on equity at 42.6% is much higher than the 10% I'm looking for there. Return on invested capital at 12.42%. EPS forecasted to be 9.72% over the next 5 years. I like 5% or better, with revenue growth forecasted at 4.9% overall. Good numbers on this one. Really like this company. Again, I'd love them to pull back closer to the 52-week low as I add to it over April. So we'll see how it shakes out. Jumping down to free cash flow here, you can go back to December 2021 again. $6 billion in free cash flow. 2022 looks like it's slightly down to $5.7 billion. 2023 a further drop to $4.7 billion. 2024 back up to $5.8 billion. Repurchase of shares, they are pulling shares out of the market very aggressively back here in 2021. $7.2 billion. 2022 $6.2 billion. 2023. Not only did free cash flow drop, but they dropped the repurchase of shares down to $705 million, but then back up again in 2024 up to $1.5 billion. So a bit of cyclicality there, but overall, taking shares out of the market, free cash flow growth is pretty decent. Union Pacific, another one. I do have 54.81466 shares. I'd like to get this. I'm probably looking at adding maybe one share a week here over the next month. So we're, probably 58, 60 shares is where we'll shake out. We'll see if it dropped down significantly, maybe back to 218. Maybe we double that up, but we'll see. Currently up 12.8%. So this would be another one. I'd be bringing my cost basis up slightly as I add to this one. All right. Well, last but certainly not least on our list that we'll be focused on in April is Alphabet, ticker GOOGL. Google here dropping like a rock on Friday, really. I mean, I bought this around 168 earlier in the week, and boy, I wish I'd have waited till Friday because this one really dropped off a cliff. Again, I'm not going to really focus on the price here, but at 157.70 was where it was at whenever I pulled this information. This one may be down in the mid 150s, if not low 150s by the end of the day if it continues to drop. It's a big drop, not unexpected. Again, the tech sector seems to be selling off, so we're going to take advantage of that. 52-week range as low as $147.22. Maybe it touches that 52-week low again, and we can get it real cheap over April. Currently high of $207.05. Beta of 1.03, so just a tick more volatile than the overall market. Analysts do call this one a consensus buy. Price target estimate of $212.77 would represent a 34.87% or 82% potential upside. Earnings date April 24, so coming up next month. PE ratio or EPS at first, earnings per share at $8.04 per share. PE ratio, price earnings ratio at 19.62. I think their average PE ratio is around 25 historically, so seems low altogether with even a lower forward projected PE at $17.57. This is the lowest payer of the group, 80 cents per share. They are a quarterly payer. We haven't even seen their first dividend raise yet. They just started paying a dividend last year, 0.51%. Ex-dividend date March 10th. They did pay out on the 17th. So another one that's already paid out their dividends. You would be in line for the next dividend, but you're going to have to wait a few months to get it. Now, jumping over here again, we cannot use dividend yield theory because you'd have to use a 5-year average, and they do not have 5 years of data to look at. But their payout ratio, extremely low, 7.46%. I am projecting double-digit raises for Alphabet. That's what I'm hoping to see, 15, if not 20%. I'd love to see at least 15% or greater on their dividend raises. We'll see what their first one is. I'm not sure when exactly they're going to announce it, but they haven't announced it yet that I have seen. If you've seen it, drop it in the comment section down below. Let me know. Return on equity and return on invested capital. Again, we're going to look at those. Return on equity, I like 10% or better. ROE sitting at 32.91%, very nice, with their return on invested capital sitting at 21.42%, both well above the 10% I'm looking for. EPS growth, again, I like 5% or better projected. They're sitting at 16.15%, so well above the 5% I'm looking for, with revenue growth forecasted at 11.52%, still growing double-digit revenue growth for Alphabet, right? I know a lot of people were saying it's slowing down. But when you're slowing down and you're still in double-digit growth, that is very, very good. Going back again to December 2021 here, you can see $67 billion in free cash flow. 2022 looks like a little bit of a down year, $60 billion. 2023, $69 billion. 2024 up to $72 billion. So at least over the last 3 years, definitely growing that free cash flow. Repurchase of capital shares, again, $50 billion in 2021. So part of the downturn in 2022 was an increase in repurchase of capital shares up to $59 million. 2023 up to $61 billion. Or $59 billion in 2022, 2023, $61 billion, and 2024, $62 billion. So very aggressively pulling shares out of the market, returning capital to shareholders that way as well. And we'll see what their dividend raise is. Now this one, whenever I pulled this, right, you can see here $170.36. This is not accurate. I would actually be down slightly based on where the current position is. And I do have more than 70. I think I'm at 84 shares. So I should have pulled the most recent. So this is actually not accurate. I have 84 shares of Google. This must have been last month because this also was one I was focused on last month as well. These numbers were good. I did a good job updating there, but not a good job pulling my most recent share count here. 70.0726 shares here currently. So forgive me for that. But Google, another one. With the big drop, you're going to want to look at all these numbers again anyway. to verify them, because again, by the end of the day, if it continues the way it is, it'll be in the low 150s, if not the high 140s, the way it's dropping on Friday. All right, well, those are the 4 that I will be focused on for the month of April, but there are so many stocks right now in the market that are undervalued. Here are some I think you could still see some or find some value in as well. Pfizer, I still think, is really cheap. I know people are worried about the dividend yield being unsustainable. That's a byproduct of the company paying a dividend, and whenever shares get cheaper, dividend yield goes up. So I'm not as concerned with that, but Pfizer is one I still see is undervalued. Oxy is one I see is undervalued. General Mills is not in my portfolio, but I see that one as undervalued. Haverty's undervalued. General Parts Company, Comcast, Chevron, General Parts Company, Chevron, and General Mills. None of these are in my portfolio, but again, I see value there. The rest of them are in my portfolio. Chevron, Valet would be another one. Comcast, NextEra Energy, Leidos is not in my portfolio either. Nutrien, Lam Research, Cisco, LyondellBasell, as well as probably at least another dozen companies. Pepsi starting to look attractive in my opinion. There's a bunch of them out there. Drop some down in the comment section below if I have not listed any here that are potentially undervalued that you are focused on. Love to hear from you. There is a lot out there in the market with the downturns. This should be the time that you're actively buying. If you got a little bit of cash on the side, start doing that research, figure out what companies you want to add, what prices you're willing to pay. This is the time to do it, ladies and gentlemen. When there are big market returns, this is whenever you're going to get the best future returns, right? Don't be afraid to buy as these companies drop. Don't try to time the bottom, just like you shouldn't be trying to time the top. Don't try to time the market. Just buy consistently. I buy every week. Hopefully you are doing the same. Set a little bit of cash aside out of every paycheck to be buying the market, whether that's index funds. Maybe you're buying VTI or VOO. The Warren Buffett would recommend the S&P 500, so something like VOO or SPY or one of the other index funds or ETFs out there that tracks the S&P 500 is what Warren Buffett would recommend. During these downturns, this is whenever you want to be consistently buying. Buy, 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 right? They're good companies. The revenues are growing, the margins are expanding, they're paying down debt, making acquisitions. Some of them are right now, buying back shares. This is the time to be buying. That extra cash that hopefully you've been saving and putting on the side, you want to start deploying into the market. But have the companies researched, have the prices you're willing to pay, and then pull the trigger. If it buys more, that's just part of investing, right? Warren Buffett famously says if you can't handle a stock you buy dropping by 50%, you shouldn't be in the market. But if it continues to drop, continue to buy. Make those weekly buys. Pick the best companies that you want to buy to and consistently invest as they go down, and eventually they'll hit the bottom and turn back around. That's part of investing. All right, well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. Let me know what you think of those 4 companies. HPQ, Googl, that's Google. HPQ, Google, Owens Corning, and Union Pacific are the 4, again, that I will be focused on, probably picking up shares of all 4, at least 3 of the 4 every week, maybe a couple others that I'll nibble on as the market pulls back. A lot of companies in my portfolio I think are a buy right now. Let me know what is a buy in your portfolio, or maybe what you're looking to add. Maybe there's some companies that you've wanted to add and you've been waiting for these pullbacks. Would love to hear from you in the comment section down below. What are you focused on for the month of April? And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.